Welcome to Russification DTV. Today, we were going to tackle about books of accounts. But before we proceed, we were going to define accounting. Accounting is the process of identifying, recording, and communicating economic events of an organization to interested users. Okay, so when we say identifying, it is to select economic events or transactions. Then recording is to record, to classify, and to summarize. Communication, it is to prepare accounting reports, then to analyze and interpret for users. There are two major types of books of account. First, journal, and the second is ledger. Okay, so the first types of books of accounts is journal. So when we say journal, it is the company's initially record transaction and events in chronological order, the order in which they occur. Thus, the journal is referred to as a book of the original entry. For each transaction, the journal shows the debit and credit effects on the specific account. So in journal, there are two types of journal. It is the general journal and the special journal. Okay, in general journal, it is the most basic journal. Typically, a general journal has space for that date, account title, and explanation, reference, and two amount column. Okay, so the journal makes several significant contribution to the recording process. Okay, number one, it discloses in one place the complete effect of a transaction. Number two, it provides a chronological record of transaction. Number three, it helps to prevent or locate errors because the debit and credit amount for each entry can be easily compared. Okay, so this is the example of general journal. Okay, in journalizing process, entering transaction data in the journal is known as journalizing. Companies make separate journal entries for each transaction. A complete entry consists of number one, date of the transaction which is entered in the date column. Number two, the debit account title, that is the account to be debited, which is entered first at the extreme left margin of the column headed account title and explanation, and the amount of the debit is recorded in the debit column. Number three, the credit account title, that is the account to be credited, which is intended and entered in the next line in the column headed. The account title is explanation, and the amount of the credit is recorded in the credit column. Fourth is a brief explanation of the transaction, which appears on the line below the credit account title. A space is left between journal entries. The blank space separates individual journal entries and makes the entire journal easier to read. Number 5. The column titled Reference, which stands for reference. A ref stands for reference, which is left blank, then the journal entry is made. This column is used later when the journal entries are transferred to the ledger account. To illustrate the recording of transaction in the general journal, let us use the following transaction as an example. So we were going to record the above or the mentioned transaction in the general ledger. Okay, so we have here an example. September 1, 2015, Mr. Ben Mabait invested 500,000 in a restaurant business by opening an account with Superbank. Okay, so cash 500,000 in debit. Credit the Mr. Ben Mabait Capital. Okay, then the summary or the explanation to record investment of Mr. Ben Mabait. Okay, so in September 5, 2015, purchases of kitchen appliances for his business amounting to 100,000 by issuing a check. Okay, so kitchen appliances that is recorded to debit and cash to credit. So explanation to record purchase of kitchen appliances. Then in September 6, 2015, he started his operation. He made a sale for that day amounting 20,000 pesos. Okay. So cash that is debited 20,000, then credit sales. Then the explanation to record sales of the day. Okay. Some entries involve only two accounts, one debit and one credit. An entry like this is considered a simple entry. Some transaction, however, requires more than two accounts in journalizing. An entry that is required three or more accounts is a compound entry. So if there is account, three or more account, that is compound entry. All of the transactions in the above examples are simple and trees. So we have an example of compound entry. Okay. So on September 7, 2015, Mr. Mabait purchased a motorcycle costing 80,000 pesos. He pays 30,000 pesos cash and agrees to pay the remaining 50,000 pesos in account to be paid later. So that is example of compound entry. So we have here, so an example of general journal with compound entry. So there are three. Transportation equipment, 80,000 for debit. Cash and account payable would be credited. So the explanation to record purchase of motorcycle by paying cash and balance on account. So that is example of compound entries. For special journal, some businesses encounter voluminous quantities of similar and recurring transaction which may create congestions if these transactions are recorded repeatedly in a single day or a month in the general journal. In the case of our examples, if Mr. Mabait will be recorded the sales per day using the official receipt or cash sales invoice issued, it would be unnecessary and impractical to credit sales account repeatedly. In order to facilitate efficient and practical recording of similar and recurring transaction, a special journal is used. Okay, so the followings are the commonly used special journals. Okay, cash receipt journal used to record all cash that has been received. Cash disbursement journal used to record all transactions involving cash payment. Sales journal or sales and account journal used to record all sales and credit on account. And also purchase and account journal used to record all purchases of inventory on credit or on account. Okay, so in cash receipt journal is used to record transaction involving receipt or collection of cash. Okay, so to illustrate, this is the format of cash receipt journal. Okay, so number one, the date of the transaction is entered in the date column. Number two, a brief explanation of the transaction is entered in the description column. Number three, the column titled Brief, which stands for reference, which is left blank when the journal entry is made. This column is used later when the journal entries are transferred to the ledger account. Okay, so next, the debit cash column represents the amount of cash received for the particular transaction. Next, the major category of receipts, such as cash sale and collection of account receivable, are provided when separate column. These transactions are frequent and repetitive items. Therefore, a separate column is provided. Next, the column Sanjay is used to various miscellaneous and less regular items such as capital investment, receipt of loan proceeds, and among others. Okay, then next we have the cash disbursement journal. Okay, so when we say cash disbursement journal, is the opposite of the cash receipt journal. It is the journal where all cash payments are recorded. So an example of cash disbursement journal. Okay, so this is the example. So first, it should indicate the date of the transaction is entered in the date of column. Then next, a brief explanation of the transaction is entered in the description column. The column titled Ref, which stands for reference, which is left blank when the journal entry is made. This journal is used later when the journal entries are transferred to the ledger account. Then next, the check or voucher number represent the identifying number of the check issued for the related cash payment. Most of the time, a check or cash voucher accompanies the disbursement. The voucher number may be used as the alternative for this column. Okay, next, the debit cash column represents the amount of cash received for the particular transaction. Next, the major categories of receipt, such as cash sales and collection of account receivable, are provided with separate column. These transactions are frequent and repetitive items. Therefore, a separate column is provided. Next, the column sundry is used to various miscellaneous and less regular items, such as capital investment, receipt of loan proceeds, among others. Okay, so the source document used to update this journal are the check voucher or cash voucher, cash receipt or official receipt from suppliers or vendors. Okay, so that is the cash disbursement journal. Okay, next we have purchase journal. Okay, so when we say purchase journal, the purchase journal or the purchases and account journal is used to record and recurring transaction of purchases on account. The source of documents of purchases journal are the invoices from the supplier of the company. Okay, so this is the example of purchase journal. Okay, first, the date of the transaction is entered in the date column. Next, a brief explanation of the transaction is entered in the description column or the name of the supplier. Next, the column titled Ref, which stands for reference, which is left blank when the journal entry is made. This column is used later when the journal entries are transferred to the ledger account. Then next, the change invoices number or sales invoice number represent the identifying number of the source document issued by the supplier. When the items, good or merchandise, were delivered to the company when the purchase was made. Excuse. Again, when the purchase is being made. Next, the debit account payable column represents the amount of the goods or item purchased on credit from the supplier. The amount is indicated in the charge invoice issued by the supplier. Okay, again, the source document of this journal is the charge invoice from the supplier or a vendor. Next, we have sales journal. Sales journal or sales and account journal is used to recording several sales transaction and account. The source document for this journal is the charge invoice or sales invoice for credit transaction to various customers or client. This is example of sales journal. Okay, number 1, the date of transaction is entered in the date column. Number 2, a brief explanation of the transaction is entered in the description column or the name of the customer. Third, the column titled ref, which stands for reference, which is left blank when the journal entry is made. This column is used later when the journal entries are transferred to the ledger account. Fourth, the charge invoice number or sales invoice number represent the identifying number of the source document issued to the customer when the sale was made. Number 5, the debit account receivable column represent the amount of the sale transaction indicated in the charge invoice. Then sixth, the credit sales column represent the amount of the sale transactions indicated in the charge invoice. Okay, so the source document of this journal is the charge invoices issued by the business. Okay, so next we have ledger. Okay, the ledger refer to the accounting book in which the accounts are there related among the recorded in the journal are posted periodically. The ledger is also known the book of final entry because all of the balance in the ledger are used in the preparation of financial statement. This is also referred to all as the T account because the basic form of the ledger is like the letter T. Okay, so there are two kinds of ledger. So it is general ledger and the subsidiary ledger. Okay, so when we say general ledger, it is the ledger which commonly referred by accounting professional as GL. So when we say GL, it is automatically it is general ledger. Is a grouping of all account used in the preparation of financial statement. The GL or general ledger is a controlling account because it summarizes all the activities that have taken place as recorded in its subsidiary ledger. So this is the example of general ledger. So the account portion, okay, so the account here refer to the account title, for example, cash or account receivable. The account number is an assigned number for each account title to facilitate is in recording the cross referencing. The date column identifies when the transaction happened. The item represents the source journal and the nature of the transaction. The reference identifies the page number of the journal or our special journal from which the information was taken. The debit and credit column are used in recording the amount of transaction from the general journal or special journal. The balance column represents the running balance of the account after considering the debit and credit amount. If the running balance amount is positive, the account has a debit balance, whereas if has a negative running balance, the account has a credit balance. Then next, the subsidiary ledger. Okay, it is a group of a like account that contains the independent data of a specific general ledger. A subsidiary ledger is created or maintained if individualized data is needed for a specific general ledger account. An example of subsidiary ledger is the individual record of various payable to supplier. The total amount of this subsidiary ledger should equal the balance in the account payable general ledger. So this is example of subsidiary ledger. Okay, the upper portion indicates the name and address of the vendors or supplier. The vendor number is an assigned number for each vendor as reference in keeping the records of a supplier. The date column identifies when the transaction happened. The description column describes the nature of transaction. The reference identifies the page number of the general or our special journal from which is information was taken. The debit and credit column reflect the various effect of every transaction to the record of the supplier or the vendor. The balance column provides the running balance of every supplier. Take note that the total running balance for all subsidiary ledger should equal the account payable ledger. Okay, so again, as we defined accounting, accounting is the process of identifying, recording, and communicating economic events of an organization to interested users. Thank you.